Today we are discussing transportation costs. First, from the point of view of householders so that it would be interesting to everyone. Then we will move on to the nuances from the point of view of business, closer to the end. We will understand their economic nature in order to understand the importance of transportation costs. Then we will understand the differences, how to take into account transportation costs, depending on whether we sell or buy something. On a practical example, we will try to reflect the accounting of transportation costs in order to make decisions from the point of view of a business owner or, for example, a top manager. Let's start with the simplest, with a household example. Imagine that we need to buy a carton of milk. There are two options. We have a convenience store 5 minutes walk, and a supermarket accessible by public transport. I chose public transport because we know the fare. It's easier for us to count. So, let's take a simple example. We have two prices, in the convenience store and the supermarket. But, now we will take into consideration the costs of moving the goods to our home. The results are on the screen. As you can see from the example, even though the price is higher in the convenience store, in the end, it is more profitable for us to go to the convenience store rather than go to the supermarket. So, the first important conclusion. The cost of acquiring any stocks, goods, raw materials, it doesn't matter. Calculated along with the price of delivery, customs clearance, transportation, loading, unloading, any additional taxes, duties, clearance costs, and so on. And only the amount received is the result of your decision. That is, the price in the seller's warehouse is far from everything. Now that it has become clear that it is very significant to take into account transportation costs, let's figure out how exactly you need to take them into account. To do this, we have a second example. We will build it based on the previous one. Imagine that we need to buy not only one carton of milk, but a set of products. An example is on the screen. Let's count the money spent on the first and the second options. We are in for a surprise. The results of our calculations are already opposite. The reason is quite clear. We went for all the products and returned only once. It did not matter whether we bought only one carton of milk or carried a whole set with them. Therefore, we conclude number 2. Delivery costs distributed over the entire batch of purchased stocks. Now we seem to understand everything. But, only until we ask ourselves one curious question. What products are more profitable to buy in a convenience store, and which ones are more profitable to go to a supermarket? That is, to distribute our transportation costs for each purchased product. And here we are in for a surprise. How are we even going to do this? All goods are heterogeneous, weigh differently, cost differently, and occupy different volumes. To understand how this problem is solved, consider a new example. We have a small business, a grocery store. For this example, we will buy all items for sale from one supplier. Of course, the supplier will deliver all this to us in one single batch. And we will sell them at different times and to various people. Therefore, to set the selling price, at least not be at a loss, we need to calculate the costs of acquiring each product separately. Let's take a look at the possible options. To make it more convenient for us, we will compile a table and enter the characteristics of each product into it. In the table, we would indicate the weight, volume, and purchase price. Let's see what happens if we distribute the transportation prices in proportion to each of the properties of the goods indicated in the table. As you can see, the results are different. Stop. And which one is correct? Which of these methods gives us the correct result? The answer is, universal, absolutely correct method does not exist. The best way to transport costs allocated would be dictated by the logic of the business. The most appropriate situation, and the most logical way in each case, will have to be chosen individually, and specifically for this business. Sometimes, such a distribution may even be illogical or unfair in terms of mathematics. For example, you can read about a magnet product in the marketing course. But, in the general case, The distribution of costs for transportation and delivery of goods to the warehouse is carried out in proportion to the price, volume, or weight. Oh yes, I forgot one more important thing. There may be a distribution in proportion to the quantity. At this stage, we figured out what happens to transportation costs when we buy something. And now, the second part. And what about transport costs when we sell? And here we have options. We do not consider the situation when buyers come to us themselves. In this case, we have zero costs for the goods delivery to customers. And we are not interested in it. We are considering a situation where we deliver our products to the buyer. Distribution costs, and the delivery of goods to the buyer as that kind of cost, are accounted for separately. When selling goods in the calculation of marginality, delivery costs are not taken into account directly. That is, the approach is directly opposite when buying. And why? The answer here is simple: it would completely misrepresent the financial statements to evaluate the effectiveness of all other components of the business. Therefore, distribution costs are taken into account in a separate cost item. Is this enough to make managerial decisions? Not. I will show you this with an example. Imagine that we have a milk production business. So, this is the milk we deliver to shops every day. To do this, we hire a carrier, which we pay for the ton-kilometers of transported products. For simplicity, we have several buyers. Each of them has several stores. But, they are all located at different distances from our factory. We have signed a contract with each buyer. So, we must deliver the products to the store. And then it turns out that the sale price is the same under every contract, regardless of which store we supply the products to. And, since we pay for shipping, an important thing turns out. The amount of money we earn varies depending on how far away the store is. Therefore, in this situation, there can be nothing better than to allocate transportation costs. We must understand in which of the stores how much we earn per unit of production. Since the example we chose is simple, the product is homogeneous. Therefore, we try to allocate the delivery costs in proportion to the weight of our milk. It turns out that even within the same product, we have different profitability under different contracts in different stores. A simple conclusion follows. You must take into account the sale of goods transportation costs in the context of counterparties and delivery points. The only question is whether this information relates to management reporting. This information is not available in standard accounting reports since it goes under different accounting items. So, we have dealt with the main approaches to transport costs. If you have any questions, please write in the comments. I will be grateful for likes and reposts. If you like the channel, subscribe.